What is up, you guys? What a crazy week it has been in the market once again. I just spent $35,000 buying and building out some more positions in my long-term portfolio. I want to share with you why I bought them, what exactly I bought, and how many shares. So let's hop into the computer and let's get started. What's up, you guys? Today is Friday, March 6th, and once again, the stock market is down big today. I mean, I think we were down almost 700 points at the open. It seems like we've bounced a little bit since there, but this, I can't say it because I don't want to get demonetized, but this, whole CV, sickness that's going around thing is really causing an issue. And a lot of people are getting more and more worried as time goes on, not only about economy overseas and about, obviously people being sick, but people are starting to get more worried about the American economy. Say that it were to get so bad, and I'm not a fearmonger, but say it were to get so bad here that we had to do what China did and shut down, a lot of our huge cities and people couldn't go to work. So there's people on the left who are like, oh, well, this is bad because the economy can just keep getting worse and worse. If we have to shut down huge cities and huge companies within the United States, this could cause some serious economic impact, And other people are like, oh, well, with technology, nothing really would change. Americans would still be buying on Amazon. People would still be spending money. It would just be more online. Companies could still do Skype calls and everything. So there's a lot of worry and a lot of fear. And there's that's the big word when we're talking about the stock market, especially in times like this. It's all fear. Yes, is the virus a problem? Of course it is. It's killing people. That's the truth. It is spreading. How fast, it is really in your eyes. There are a lot of people who say it's, like the flu or it's not as bad as the flu. It doesn't matter, right? The fact is that it is happening. It is in America. I think the first couple cases were in Pennsylvania, where I live, that I just saw they closed a couple schools, hours away from me. So it is real, and that's something to think about. But a lot of people are wondering, especially investors, like, is it as bad as the media is saying that it is? And so that's kind of what I want to go over today. And I spent close to like $35,000 between yesterday and today. And I want to go over with you guys exactly what I spent that money on. And I'm honestly like, I'm running out of money, guys. I only have like $11,000 on the sideline, which I want to keep there. One, to average down with, of course, and also so I can trade, because trading is my living. Trading is what I love doing. So let's go over my positions in this account. And then I also have a smaller Robinhood account on the side. I'll go over those positions. So the first position we have here is Boeing. The second position is Wynn Resorts. The third is Disney. The fourth is Revolve. The fifth is CCL, or Carnival Cruise Lines. And then we have Facebook. And then I took a little screenshot of some Robinhood. So that's American Airlines. And one of the biggest positions in this portfolio, which is Uber. Now, Uber, I'm taking a huge hit on. I was up like almost $1,300 on Uber after earnings. Of course, I'm not going to sell it. It's a company I believe in for the long term. But those are the positions I have right now. And let's start with why I bought the companies, why I see value, where I see them going. Okay. And now, for those of you who are worried because you've never been around during a correction or potentially even a recession, a lot of people were asking me, like, what should I do? Should I just sell everything that I have and wait for the market to, continue to go lower? Or should I just keep some cash on the side, keep buying as it goes down? And there are a lot of people who don't have cash on the side. One, because they're either fully invested, or two, they just don't have money like that to continue to just throw into the market. And so I think that the first thing, before we really get into these positions, is you have to think to yourself, right, as an investor or even as a trader, right, even if you're just a trader and you don't really think you have enough to be a long-term investor, what is your investment timeline? How long do you plan on investing for? All of these investments that I have, I'm looking for the next 1 year to 3 years. Unless we get a huge push, like unless something crazy happens and we get a big bounce here, then maybe I would get out of these positions. But overall, these positions are things that I'm cool with. Like, say the market continues to die and, I think we're down 14% from highs right now. Say it goes down to 40% from highs. Each one of these companies I would hold. Like, I would honestly probably hold every one of these companies until the day I die. And so that's something that you have to think about as well. First company is Boeing. If you watch the 3 stocks that I bought in March 2020 that came out at the beginning of the week, you would see my full thesis on Boeing and why I took this small position in the beginning, which now is up to almost, I think, $9,000 worth of Boeing that I own. My average price is like $268 a share. I wish I would have been more patient. I wish I would have waited because I would have loved to start a position at $250 like it was this morning. But what are you going to do? If you find a company that you really like at a very attractive valuation, take the position, at least take a starter. That's in my opinion. Like I said, if it's something that you really like. So the balance sheet is not really that amazing right now. I'm more so playing this as a recovery play. I don't see Boeing going anywhere in the next 10 years. I do think that Boeing is a great company. I know with Muhlenberg gone that some people weren't happy about that, but I do think that the executive management is still a great team, a great group of people. I do think that fundamentally Boeing is a great company. They're having some huge issues, obviously, with the 737 MAX. And I do think that if there's any executive management team that can get through this, it's them. And the other thing that's good about, Boeing too, is that they have a great reputation. And I talk about reputation in my free stock market course. I'm going to link that down below. Talk about how, brand and reputation has a lot to do with everything. And if you look at a company like Boeing, who does a lot of business to business and business to government, it's important to have a strong brand because they can get through some troubling times such as these. Yes, the fundamentals aren't, right where I want them. They're not the best. The dividend is pretty enticing. At this price, it's over 3%, but that's not really why I got them. Anytime Boeing used to dip under $300, I would grab them. And I think that Boeing at $250 a share, guys, is pretty amazing. Next company that I took a position in yesterday was Wynn Resorts, and I have about 62 shares in Wynn currently for about around $6,000 worth of stock retail. Now, Wynn Resorts under $100 really is it's amazing. Like I every single time it touches 100, I buy in. I'm not going to pull up TOS and get into the technicals. You can even see here, just from a trend standpoint, every time we touch around that $100 area, we bounce. That's not why I'm buying this company right now, right? I'm buying this company because they have a great dividend. The PE is, not, let's see. For those of you, actually, this will help you because for those of you who don't know how to calculate PE, let's teach you how, okay? So you take the price of the stock, which right now is $96, and you divide that by the annual non-GAAP earnings, which is $4.26. So the PE is 22.5, which is pretty enticing. Like I say, anything under 25 is a pretty good PE in my opinion. Problem with Wynn Resorts right now is obviously all of this stuff with, like I can't say it, it's hard, guys, but, with the CV over in China. So that has their Macau, which is one of their biggest gambling resorts, that has the Macau location completely shut down right now. Now, something that you have to remember as far as the stock market is considered, we're not moving at prices that reflect what's happening right now. The market is constantly pricing things in and moving in the future. So if you look at companies like CCL, if you look at companies like Wynn, this price has to do with what people are expecting in the future with, revenue, obviously, I think they said like down 70% for Wynn over in China. But it's the same thing with the market. If you look at the stock market before this big drop, why was it ripping? Well, we were pricing in a lot of different things. Number one, we were pricing in the fact that Bernie Sanders probably wasn't going to get the primary, or Warren, because that would have been a big issue. We were pricing in the potential trade deal because we had that phase 1 trade deal. And what we really were not pricing in was the CV. right? And China shutting down and all the issues that we're having, and it's spreading all over the place. So the market is constantly pricing in the future. So yeah, I mean, with Wynn Resorts, with Carnival Cruise Lines, with American Airlines, yeah, I mean, you're going to see terrible revenue numbers. But even when earnings come out in April, or April, May, we might see a huge push up in the stock price because maybe, people were expecting way worse numbers. So we'll see. But that's not why I am in Wynn. I am in Wynn because I think that the management team is amazing. I think that Wynn has a very good luxury brand. I do think that the PE is very attractive. I do think that the annual dividend is 4%. It's pretty enticing as well. Fundamentally, from an income statement and a balance sheet perspective, I really love this stock. It's also trading at a 52-week low. Next stock that I actually averaged down on because I did have a position was Disney. And right now I own 39 shares with like a retail value of $4,500. Now, for my full thesis on why I love Disney, why I invested in them, once again, check the video down below. But very quickly, the annual dividend is 1.5%. I don't really care about that. The PE ratio is very attractive. It is trading around its 52-week low. This stock has really been taking a hit because they're closing a lot of their overseas locations because of the CV. And as well, with Bob Iger leaving and Bob Chapek taking over, as CEO, it has a lot of investors worried. Now, the next company that I actually bought back into because I sold up around $16 is the company Revolve. Now, the reason why I sold this company, even though the fundamentals are great, the executive management is great, and the PE is attractive, is because during a recession, I think that this company could have some problems. If you don't know what the company Revolve is, they're a women's online fashion retailer, and a lot of their clothes are pretty high end, I would think, to like your average woman. The average purchase price on the company's website is about $300. And I think that if we see a recession where, obviously jobs are going down, spending is going down, consumer sentiment is going down, I don't think many people will be paying for high-end fashion clothes online. That's just my personal opinion, but that is why I initially sold it. Once we got down to about $14.50 was when I was like, all right, I really like this company in the long term. Their growth is phenomenal. The fundamentals are there. I want to get back in. So I think I'm in for 300 shares or like 4,300 or something dollars around that. So it's trading at its 52-week low, which is great. There's obviously not a dividend because this company is still very young. I think they've been around since 2007. But from a public standpoint, they just IPO'd 2 years ago. So moving on, we have CCL or Carnival Cruise Lines. I just started a position in this yesterday. I got 130 shares. And right now the retail value is about $3,800. And honestly, I'm pretty upset about this. This morning, I think it was down to like almost $26 a share. I was going to average down, and then out of nowhere, all of these travel and vacation stocks started ripping this morning. And I think it's because value investors finally realize like this is a great deal for a lot of these companies, especially these cruise companies like Viking, Carnival, Norwegian. And I think also that the short sellers are finally covering their profits, getting out of the positions. And I think that we're going to see in the short term a bit of a bounce here with these travel companies. But I think in the long term, this is a phenomenal price to get into. I mean, yeah, with the whole CV happening, a lot of people are afraid to travel, and I would obviously assume that. But let's actually look into the fundamentals of this company, and I want to take a little more time with a company like CCL to actually show you how great of a deal that you're getting at this point. Obviously, it is trading very close to its 52-week low. The PE ratio, the PE on this company is 6.45. That is crazy. I mean, if we just quickly look, not even technically, we were trading up around $60 in the past year, and in the past 3 years, this was close to a $70 stock. If we look at the annual dividend, it's almost a 7% dividend at this point. We take a look quickly at the fundamentals. Everything that I love in a company, income, every single year going up year over year. If we take a look at the annual income statement, we can see total revenue going up year over the past 5 years. We can also see that total net income going up year over year. Of course, 2019, that was kind of a bit of a drop off, but still, if we take a quick look at the balance sheet, you can see that obviously total assets versus total liabilities, you can pay them 2-to-1, which is great because when they have a ton of money sitting around on the balance sheets and they can pay off all their debts at least 2-to-1, during these turbulent times that a company might have, they're not going to have to lay people off. They're not going to have to make, short-term financial decisions that are going to affect the long-term movement and the long-term growth of this company. So that's something that I really like. The last company that we have in this TD Ameritrade account is Facebook. And this is the smallest position that I own on this portfolio. So I only have 15 shares of Facebook, which is only worth about $2,700. Pretty quickly, just going over this, you can see that the PE ratio is pretty good. There is no dividend. It's trading right around the middle of the 52-week low. Fundamentally, if you want to look at an amazing income statement, an amazing balance sheet, and something that should be an example for anything you want to look at in the future, it is Facebook stock. I do think that Facebook has a ton of room to grow. I do think that if the CV issue continues, obviously more people are going to be stuck at home. More people are going to be on the internet. If I'm looking out in the next 1, 3, 5 years, Facebook is an amazing investment. Now, one of the two companies that I have on my Robinhood account is AAL, or American Airlines. I started this position yesterday. I went in with 250 shares, which is worth about $4,000. American Airlines is not a company that I would normally invest in. The only reason that I'm invested in them right now is simply for the fact that all of the CV issue is really beating the hell out of these travel companies. And honestly, if American Airlines rips another 5, 6, 7%, I will probably sell out because of all the companies that I have, American Airlines is not the one that I have the most confidence in. But very quickly, let's just take a look. The PE ratio, very attractive. The annual dividend, 2.5%, which is nice. It's trading very, very close to its 52-week low. Now let's take a look at fundamentals. Go to the income statement. You can see that as far as revenue, it's been pretty stagnant. We have not seen much, if not any, growth over the past couple of years. So that is one question to ask yourself: how much can this company really end up growing? Now, the other thing that you want to take a look at always is the net income. And we can see that this company is losing. It's not losing more, it's still profitable, but they're not keeping as much money every single year as they really should be. So one of the other things that you need to look at is coming up to the balance sheet, because in a situation like this where the market is selling off hard and nobody wants to travel, you want to make sure that at a time like this where there's a lot of panic in the market, that you want to have a strong balance sheet like CCL. Travel companies are dealing with these issues because people aren't traveling. They're getting a lot of flack in the media, and really the revenue is going to get hit hard. So you want to make sure that they have a good balance sheet so that they can withstand through those tough times, right? We can see here that obviously their cash and cash equivalents is getting smaller and smaller every single year. And very quickly, we can just see that the total assets to total liabilities is a 1-to-1. Not really something that I would normally tell somebody to invest in. And honestly, out of all of the airline companies, I think American Airlines is probably one of the worst. I personally probably would have went with Delta, but the reason I went with American Airlines is kind of on a whim, which I don't normally do and I don't normally tell people to do. But the stock market was closing yesterday. I was hanging out at the grocery store and I was just scrolling through my phone looking at the biggest movers, and I saw American Airlines and I was like, oh man, I remember looking at the fundamentals, I remember looking at the balance sheet. I remember that it wasn't terrible. That's not how you should invest, guys. So I remember I was like, it's not terrible. I'll just go with 250 shares. It'll be like a short-term move. So you should not invest that way. And I'm up. That's great, but that's not something that you should be doing. And I'll be the first one to tell you, I made a mistake with that. So if we can continue to move up with American Airlines, I'll just cut out and I'll take the profits and I'll just save the money on the side to trade with. The company we're going to talk about is Uber Technologies. I already had a pretty sizable position in Uber. I averaged down a little bit yesterday when it was at $30 a share. But I'm not going to go super deep into Uber and my bullish thesis on them, simply because I want to make a full video on this. Uber is one of those companies where, kind of like Tesla was a couple years ago, where people either love Uber and they're going to put everything they have into it and they believe it's going to be this conglomerate in 15 years from now, Or people are like, Uber's terrible, they don't make a profit, their path to profitability is terrible, and so I am on the bullish side. One of my main reasons is simply because I think that they're not, a lot of people look at them as simply just a ride sharing company. And I don't. I look at them more of a technology company. I think of them more of like a data company, because you have to think every single time that somebody is driving in one of these vehicles, it is collecting data. It's collecting data on what people are buying, what kind of different areas are going to different restaurants, where people are going, what drivers are doing, how drivers are driving. All of these things are being put into this cloud system that Uber has. Not to mention Uber Freight, then we have normal Uber, Uber Eats, Uber Black, all these different things. So I do think that they are a disruptor, and I'll make a whole video on this in the future. One of the biggest things that people are saying is like, obviously Uber is not profitable. Their path to profitability does not look very, alluring, or that it's going to happen anytime soon. I do know that CEO Dara said that, as far as EBITDA is considered by, I think he said Q4 of 2020, which is this year, that they will be profitable, which is pretty amazing. If you look closely, you can see that Uber's ride sharing company is profitable. What's really weighing down on it is Uber Eats. So we'll see how this company ends up moving into the future. They're a company that I really like and I do believe in, and I will make a full-length video on Uber and my bullish thesis in the future. Thank you for stopping by. I know that it has been a crazy past couple of weeks in the stock market, but I want you guys to know that I'm here for you if you need anything. I want to thank you guys. We're almost at 660 subscribers, which is absolutely amazing. I just started this channel full time only about 3 or 4 months ago. If you guys want to be a part of my private stock market membership group, I will link it below. For $30 a month, you get access to every single course I've created. I'm actually dropping a swing trading like a professional course this weekend as well. You also get access to my private Discord, where I go through every single trade and investment that I'm making live. So if you were part of my private Discord yesterday, you would have seen every single one of these buys and sells inside of the Discord live. So if you want to be a part of that community, we would love to have you. For only $1 a day, you can join us, and I will put the link down below. I want to thank you guys for watching, and the main takeaway from this video that I want you to have: the market is driven by fear and greed. Those are the two emotions that drive the market. And I will tell you from my own personal life and from being in the markets for over 5 years now, fear is stronger than greed. And that's why we're seeing this huge sell-off. If you are somebody who's trying to make a short-term buck off of the market or trying to trade, which I do, there's nothing wrong with that, right? You have to realize how to stop out of different things and how to cut your losses and just walk away with your tail between your legs. It sucks, but it's a big part of trading. And if you're an investor, you have to realize when to hold strong and be steady. You have to know that, hey, every single time I'm taking a trade, I'm not expecting to touch this money for 1, 3, 5, maybe 10 years, right? You have to predetermine that before you take the position. I want to thank you guys for watching, and until next time, I'll see you.